guest hosting today for Mr. Joel Conan, who is sipping Mai Tais on the beach here in Florida, and my co-host, Mr. Dennis Dick. Good morning, Dennis.
Hi, Kyle. What's going on?
I am excited to actually be co-hosting and on the show, man. It's been, we've been up for about a month and a half, and I get to partake in some of the action now.
Joel
Yeah,
may or may not be sipping a Mai Tai. I just saw him sign on to Skype, so I think he's listening to the show.
He's probably babysitting, wondering what the heck we're doing. But guys, we got a pretty exciting show today. Obviously, it's thinly traded Christmas week with the holiday on Wednesday. But we got some of note to talk about. But before that, Dennis had to bring up right before the show the pain that was our Sunday afternoon with the Detroit Lions.
you know
Ouch.
what though? We're all used to pain with the Detroit Lions though, so it doesn't even hurt as bad as because of the last decade, what have we made the playoffs here once? So we
Once.
were all excited. It was 6-3. It looked like everything was going fine. We controlled our own destiny, and somehow the Lions have found a way to actually blow this whole season, and it came to a halting end last night.
And not only that, we had everything went right for us. We had the Bears lose and the Packers lose in fantastic fashion, but we still decided to let the Giants beat us. So you got. I'm calling for Schwartz's head. That's what I'm calling for. We need him to be fired, and I was hoping to hear that this morning, but I haven't heard anything across the wire yet.
I'm starting to think it's just me. All of the teams I cheer for are losers. The only Detroit sports franchise that I do not like is the Detroit Red Wings,
And
and they're
those are
the
your
only good
winners.
one. So I really, I think it's me. I'm sorry, guys. If I actually wasn't a Lions fan, they would be awesome, but
Thanks a
it's
lot,
probably all me.
Dennis.
So
See, and you're
just
not
blame
a
me, guys.
and you're not a Wings fan.
I know, exactly.
So
And the Wings are
because
good. If
they're
I was a
too good
Wings
for
fan, the
you,
Wings would stink too.
as you said
So,
earlier.
I'm short
eh.
Dennis's sports teams in.
There
Oh
you
yeah,
go.
I just know how to pick them, man. I know how to pick the horrible teams. I just like misery. I'm all about misery, I guess, and that's what I like. So let's move on to some good news here. We do have Apple flying this morning. Well, I guess we know what this China Mobile deal is worth because 2 weeks ago, when the rumors were coming out that Apple and China Mobile were going to get the deal, the stock popped $20. Then last week, obviously, when the deal was not announced, when it was expected to be announced, the stock sold off $20. Well, the deal is announced here this morning. It's beginning January 17th, 2014 with China Mobile, and the stock is popping $20. So we're up at 568 right now, went out at 549.02. So Apple shareholders very happy here this morning.
That thing ripped right at the you said huge candle right in the morning. 550 what 553 all the way to 571.15 we're hitting right now. Oh,
Yeah, I'm trying to see. Do you have
572.99.
the highs there, Kyle? Can you see where how high it has been? We usually like to give our pre-market traders.
I
I
think it
got
just hit.
573.60. Does that sound right to
Yep, that
you?
sounds right about right.
Yeah, 573.60 the overnight high. So we are $5 off the high. Last time we actually did see this deal get announced, interesting enough, we've already had a shot to see how these deals respond. We had the $20 lift in the pre-market, and it was kind of a little bit of buy on rumor, sell on. Well, it was still a rumor then, but they were treating it as news, and it actually did give back some of its gains. So interesting enough here, we're starting to see a little bit of that happen here in the pre-market. Like we said, we've been up at 573.60. We've pulled back $5.20 since that time. So keep that in mind if you're trading this thing. Obviously, keep the 573 level in mind, but also keep in mind that this deal was pretty much known that it was going to happen here. So I just wonder if we might start to see a little bit of profit taking here as the morning continues.
Yep, and the China Mobile deal a little bit more into that too. They have like something like 700 million subscribers. So I think that's what we're really looking at as the number here. Do you see anything about that, Dennis?
Well, and if you look at the chart of CHL there too, it is getting a pretty good lift here as well on the thing. So obviously, China Mobile is huge for Apple, but this is a big deal for China Mobile too, to come in and to obviously have the Apple. So 51.63 is where it went out, and it is trading up at $53. An odd lot just traded 50 shares there at $53 even. So here you are, 52.90 bid. So it looks like they are buying the China Mobile here on this news as well. And interesting enough, we have found some pretty good support in the low 51s. If you go back in October, we got down to 51.51. November, we got down to 51.41. Just 2 days ago, we got down to 51.22. We are popping back up again. So this whole 51.20, 51.30 area has given us major support. And now we're rallying up and we're trying to get back up over 53. If you look back to the high on, just trying to grab the date, on the 11th, we got up to 52.96. So that's your first area. And then you get into a little gap area if you go past back beyond that. So 53 bucks, maybe it looks like it's going to try to be a little bit of a stopping point here. Above that, it does open up to probably about the whole 53.45 area. There's a 45-cent gap in there. So
Where are you seeing Apple, Dennis?
where do I see Apple? So if I go back to the technical charts, the technicals on Apple here, obviously we've got up to the 575.13 high, which has been the high for the entire move. And I believe that is the high for the year. Were we higher at the beginning of the year? No, that is the high for the year. So 575.13 is where it topped out. And that's where in the pre-market on the day, I can kind of remember the trading. I think I got up to 577 or 578 on the time that they first suspected that this deal was going to get announced. So here we are, we're at 567 right now. So it seems like this thing is in the 570s. It finds resistance. Obviously 573 was resistance here again. And again, like I said, this might be one of those situations where everybody knew this deal was kind of coming. They're giving you 20 points off the hop. This could be one of those buy on rumor, sell on news type deals here. So I think we're going to stay positive here on Apple, but I don't know if we're going to close up 20 bucks here or not. I think we got a better shot of seeing 560 than we do like 580. I guess we're at 567.
So you're
right
looking
now,
for a lower close, even though in the pre-market here we're still up about 20 bucks.
Yeah, I think we're going to close positive. I don't think we're going to give back the whole 20, but it wouldn't surprise me if this stock came back and retest that whole 560 area, which is 8 points lower than this right now. And like you were saying, we're in a holiday week here. So a lot of times you don't see a lot of action, but one thing you do have in a holiday week is less liquidity. There's less orders on the book, there's less participation. So if there is action, if there is a trader that wants in or wants out,
It's going to move.
that will move the price more. So exactly. So you might have a little bit more moves in something like this just because it could be a little bit thinner, the bucks.
Well, let's talk about one of my favorite stocks, Dennis, and that is only because, working at Benzinga gives me a ton of headlines to play with. But it's BBRY. Friday earnings, we saw obviously very, very disappointing, but, you and I were talking before the show here about how it's reacting.
Yeah, and we were watching the show, and we were watching the charting action actually even pre-market Friday. And if you go back and listen to the Friday show, and you see this sometimes when a stock, and I think even Joe had mentioned it, when a stock has so much bad news already priced into it, and then they come out with a disaster quarter, and the stock was actually trading down 30, 40 cents, but it had started coming back in the pre-market, and that was the tell. And that's why we really like to focus on the pre-market action here on the show, because it can really give you a hint to what might be happening in the regular session. So it had already gotten back most of the gains by the time our show had ended at 8, or by the time even at 8:45 when I actually had to hop off the show, it was already trying to go positive. So it had already kind of told you that, well, man, everybody's leaning the wrong way on this thing. Everybody thinks the company's going out of business. So the short-term herd maybe just a little bit too short. Everybody's obviously dumped it if they've owned it as an investment. So if the short-term crowd gets a little bit leaning to the bearish side, the stock may actually rally on this horrible report. And that's what we mentioned on Friday. And it actually did. I did not see the rally coming that it showed on Friday. Holy cow, man. That thing just took off. And I mean, it took off. It opened up, basically had a little bit of a dip after the open, and then straight up $1. So a $6 goes up to $7.20 some odd cents, or $7.32, and then just kind of hangs out here. But just a classic situation where the news has just been so priced in. It's been all bad here for BlackBerry, so it pretty much had only one direction to go, and that was up.
Now, are you going to be looking for this thing to kind of recorrect a little bit today, or?
I think $7 is important for it to hold. I think you squeezed a lot of the shorts probably on Friday, but you might have caught a few too. $8, absolutely enormous. I mean, if this thing starts to go parabolic and get into rally mode here again, you start getting up to that $8 area. That's where we had huge consolidation in September and October. That's where I would say there's major resistance up there. So I don't know if I'd be coming out short at 724 right now. It wouldn't surprise me if you get a little bit of follow through move. If I was looking to pick this up, if it took out $7, I would probably get concerned. But if you think in I'm a big fan of the 2-day move. If you think you have potential for another, spike up here, another follow through move here today, I would want to see the stock at least hold 7. If it starts taking out 7, then all bets are off, because that's going to be a psychological level here, probably for the new little bulls who decide to buy the stock on Friday. And actually, when we pulled back there, we consolidated for a while around 7 too. So I think 7's important to hold if you're going to put a little short-term bullish theme on BlackBerry.
Now let's talk about, right before we got on today, the Santa Claus rally is always what everyone's talking about at the middle and end of December. Last week we didn't think we were going to see one, but now we're seeing some, major stocks hitting all-time highs, as well as the S&P 500. I'm going to pull up first here Amazon on the charts, Dennis.
Yeah, you've got a lot of stocks, and obviously Santa Claus Bernanke there really helped the market last week when he obviously did the taper, and everybody's like, oh, and there's a big head fake off the bat. But then we knew the taper. I think you were even talking about that, Kyle, when you came on to do some macro talk there. The taper, they just didn't taper very much. They're still buying a lot. I mean,
It was the tea and tapering.
Is that what they're saying? It was the tea and taper. So it was a lot lighter, I think, than the market had feared. They obviously going to continue to be very accommodating here, and that's why we spiked up. And we've really, been straight up ever since. And here, holy cow, we're making new all-time highs again this morning. And certain stocks or other stocks are making all-time highs too. And Amazon is one of them. Amazon took out the $400 level there on Friday, made a high of 404.72. Is trying to follow through here a bit this morning. It's up another $2.72 here. So had a little bit of a weak close. We're talking about that in a bit. A lot of stocks actually had a weak close, but Amazon is popping back up to all-time highs here again this morning.
Now we also got Google hitting all-time highs as well.
Yep. Yeah, Google here is actually breaking out even further this morning. It closed almost on the button at 1100, got up to 1101.17, took out the $1,100 marker, and now trading up another 7 points here this morning at 1108. The bull theme, these stocks, these were your leaders the entire year. And the funny thing, in the last couple days, the leaders from your year are starting to become your leaders here again. The Googles and the Amazons. Actually, Twitter is making a new all-time high this morning. You've even, seeing some life. Obviously, Facebook is coming up and trying to make new all-time highs here again. Tesla has come back, not to the highs that it was earlier in the year, but all these stocks here just continue to march. Your leaders continue to be your leaders, and Google here is no exception. It's up another $7 here this morning, and this company just it can't do any wrong right now. Google just keeps marching.
You said Facebook's hitting all-time highs as well?
Yeah, Facebook actually, I don't think this morning we're up quite to the all-time highs here. I'm just bringing it up here.
I got 55.
We actually did kiss it 3 days ago. I believe the all-time high, well, I'm just going from the intraday, is 55.89. So we're just about 50 cents off the all-time high here. But that's getting close here again. So here they were concerned, obviously, with Facebook. They had a little bit of a sell-off there a couple days ago, but with the Zuckerberg share sale there. But that seems to be all gone 2 days later, and it was just an excuse to come in and buy the stock again. And like I said, I don't love those video ads. Really, I don't really like it. I think long term they might actually turn off a few users, but short term this is good for the stock. It's more immediate money here. We were saying short term gain for long term pain, and the shareholders are gaining on this stuff here now. And obviously the stock is only 50 cents off its all-time high. Wouldn't surprise me if it goes up there and kisses a new high again, because all these other stocks are doing the same thing.
And I was sitting with a family yesterday for our holiday party, and I was talking to my nieces and nephews, or not nieces and nephews, little cousins that were in high school and middle school, and I was asking, I was like, well, are you guys on Facebook? And they just gave me the whole runaround on none of them use Facebook. They would never touch that because their mom and their dad and I'm on there, and they don't want us to see what they're doing. So that was actually a really, really surprising. It was eye-opening, actually, to see that in progress. So, yeah, long-term Facebook, not even just the ads and their intrusiveness, but actually getting the teenage users is obviously a huge problem. I didn't realize that until you actually talk to them and hear how compulsive Facebook is to them.
Are they on Twitter? Are those? Did you ask them if they were on Twitter?
They're on Twitter. They're on Twitter, and they're on either like Instagram or Snapchat. So I guess that purchase of Snapchat from either Google or Facebook made a lot more sense. What's interesting too is, they use it for different reasons. And I heard someone talk about when Packner was on about Facebook saying, or looking at it and saying when those people turn, out of college and they get into the world and they don't have their social network around them all the time, that's when you'll start using Facebook. So it was very interesting. Yeah, Twitter and Instagram are the two big ones that they all used.
Yeah, well, Twitter too. Obviously, let's talk about that stock too here because it actually is. It was hitting a new all-time high here right before we started, 8 o'clock, but it's pulled back here now. Actually, got up to 60.24 back on the 16th. And the pre-market here, I could try to go find the TWTR high
I
here.
see
Let
a
me see,
huge candle
60.30.
down right now.
Yeah, so it was at 60.30, so it did kiss up, but now it's pulled back here. The high actually, I believe on Friday was 60 and a quarter too. So here you are. You almost could argue there's a double top in there, and the pre-market kind of backing that up too at the 60.30. So somebody, like Joel always says, when you see 1, 2, 3 highs in the area, it looks like somebody big maybe taking off a piece there that's kind of blocking the road up there at 60 and a quarter. So that's going to be resistance here once again, probably in the regular session. Obviously, if it breaks out through there, then you're at all-time highs and all bets are off. But resistance pretty well defined here on the Twitter, and it is pulling back here a little bit this morning. Settled at 60.01, is trading right now at 59.71. So despite the market being up 8.5 points, here's one social media stock that is not following through with the market this morning.
You
So,
thinking sellers and mutual funds trying to get out, or someone trying to take a profit on this guy, huh?
well, there's just so many people sitting on profits on this thing too, so it's something to consider actually. Obviously, often what you see here is, people don't want to do it till the last couple of days when it settles the next year, and they don't pay the gains on the thing till the
Mm-hmm.
next year. But I don't know. We're pulling back here a little bit here. Whenever you have a stock move up, we're looking at 1, 2, 3, 4. In the last 10 trading sessions, we went from 45 to 60. So the stock is basically up 33% in 10 trading sessions. It's been an
On a
awesome move of the
tear.
stock. If you were long it, obviously you're sitting on some huge gains here. So I think some people might be looking at it here because I'm just looking at the relative strength this morning. All these other stocks we just talked about are trying to break out to new highs here, and Twitter is kind of just sitting around here and actually trading down 30 cents. So that's telling me that somebody's nervous on this. Brent, there wasn't any headlines that broke on Twitter here in the last 20 minutes or so,
I
was
don't
there?
think so. But let me
Yeah.
check. I'm
So
on it. News
I don't
desk,
I don't see
Benzinga
it. I
news
don't see
desk,
anything
on it.
jumping out. I don't see anything jumping out at me either here, so it's probably pure technical. I mean, this thing's bouncing around $2, $3 on no news every day. It's trying to find its home. You are still shortly after the IPO. The thing's trying to find where its value really is. People aren't really sure. They look at this and you can say, oh well, the multiple's not really even making money yet. How can you have this kind of a market cap on the thing? But I think they just don't know the potential of the company. So it's really hard to say. And we know you can look at a stock like Amazon for years. This really hasn't made money, but they keep reinvesting their profits into the company there, and Amazon keeps making all-time highs. You see a stock like Tesla that really isn't making money yet, so they are pricing stocks on potential here, and Twitter has a lot of potential, so that's what you've got to consider there too. But technicals are telling me that 60 and a quarter here is going to give you some resistance possibly
Den-
today again.
Dennis, do you think that from a historical or how we're usually pricing the stocks, especially for something like Twitter and Amazon, it's hard to price these stocks. So does that add more risk to actually maybe not short term trading but long term investing into stocks like this?
Definitely makes it's these things are very risky from both directions, even if you're trying to play it from a fundamental perspective. And I talk to a lot of fundamental guys on the street, and they're like, I wouldn't touch Twitter. And some people actually come and try to short these things, and that's a scary thought too,
Mm-hmm.
because you just don't know. And even if you think, and even if you have the whole thing right, like look at the tech bubble back in the day in 2000, we go back to there, a lot of people were right with those calls. They were saying, oh, you got this company, this internet company that's got sales of a 7-Eleven trading with a market cap of $2 billion. This thing's eventually going to zero. Well, a lot of those stocks went from 20 to 200 and then to zero. Well, you wouldn't have been able to hold through all that. So until the trend really turns, it's hard to say, oh, I don't like the fundamentals, so I'm going to short the stock. You got to kind of go with the flow here. And the flow right now for these stocks is still higher, despite Twitter trading down here when the market's, it's a little bit of a breather maybe for a stock that's still got a lot of relative strength. It's had been on an incredible move, and good stocks can take breathers here. And if it starts breaking out through 60 and a quarter, it could be off to the races here again. So, but you got your price lines, your Amazons, your Facebooks, all these stocks are priced on potential. And there is a lot of risk if you're looking at investing in these things because it's not really known what that potential is. There's just unknowns there. But here you got to, Amazon, they just increasing, how many people are buy stuff on Amazon? Like everybody I know, has Amazon accounts and buys things on
My
there.
my
So,
mom my mom did every single last gift she bought was on Amazon this year, and she was absolutely enthralled with it. So That was kind of like one of those moments of clarity for me, sitting there going like, okay, the retailer's got to be hurting because my mom has never done anything like that. She's not, online shopping all the time. So when she told me yesterday she bought every single gift on Amazon, that was kind of like an eye opener.
I mean, they can sell everything cheaper. They don't have the overhead
2 day
of running
shipping.
physical stores. So they've got a big advantage on that. And I still think companies like FedEx and UPS benefit from that too. If you
Mm-hmm.
bring up FDX and UPS, you got those two stocks that are at all-time highs too. FedEx, they actually announced a earnings quarter that wasn't that great 3 days ago. And in 3 days, they've shrugged it off. And here's FedEx making new all-time highs here again. It's had huge, and this is a breakout for FedEx. This chart looks awesome. You look at this, the 140 area was just enormous resistance here for basically the last month and a half. And kaboom, we just took that out with a vengeance on Friday there. Blew through that level, closed near the highs, 142.71. We're trading up another 30 cents here this morning.
140
This is
gas,
a chart
302.
that directly benefits from, everybody buying things on Amazon because these things need to be shipped. Unless, Amazon's going to start dropping everything off with these drones and stuff. I mean, FedEx, every time I order something from Amazon, it's a FedEx or a UPS truck that's bringing it. So both of these companies here, you can look at the UPS too. I believe that is all-time highs for UPS as well. So here's two stocks. You can look at them. You can think, oh, Amazon. And then you can look at FedEx, UPS, how they related. Well, they're very related there. And those two stock charts, FedEx and UPS, look a lot like that Amazon chart. They're straight up here right now and breaking out to new all-time highs again. So
What do you have?
there's two.
What do you have as the? You have any resistance on these two?
Well, there's really nothing because we've never been up here before. We had Chris Banier, and this is the nice thing about when you're buying breakouts and when they actually are real breakouts. You want to make sure that they don't go back through your level. Whenever you're a breakout trader, this is one thing to keep in mind. If you're buying a first stock for a breakout, when it stops breaking out, you don't want to be owning it. So obviously, if you're buying it through that 140 and you're saying it's breaking out, if it now comes back and trades below 140, then that could be a failed breakout and it could catch you and could catch other breakout traders too. But as long as it stays above that 140 level, bulls are in control. Chris Banier, the guy I traded with for years, he always says there's no pain up there. We always say price has memory. Well, there's nobody's under any heat up there. Like if you look at Apple or whatever, a stock like that, well, it's been up to 700, it's been up to 650. It's been up to 600 in the past. So as it comes up, it can run into new sellers that are people who have bought the stock there before. It's called loss aversion. And so many people, I mean, probably 90% of the investing public says, oh, if I could just get my money back, I would sell it. And they hold on and it comes back. Well, that's never happened in the stock like FedEx here. It's never happened in Amazon because these stocks are at all-time highs. So nobody has that pain up here, which obviously you don't run into those new sellers who can give that old resistance there. So there really is no levels to talk about on the upside here, which is a good thing if you're long the stock. It means it has potential to obviously continue to climb. The only thing we can look at is psychological levels, and that's when we start to look at the whole numbers like a 150, because there'll be people that have option positions. They might be long the outside calls here, it gets up to 150, then they can start selling the stock against their calls and locking in gains. So that's why we do look at big whole numbers, but that's pretty much all you can look at. I'd look at the 145, I'd probably look at the 150. So the first stopping point I would probably think, if you're looking just from a numbers perspective, would be 145 on FedEx. And if we bring up the UPS chart and we just go back to that one there, Kyle, 105 probably would be a big number on UPS as well, because that's where your strike's going to be. I can actually see 9,100 shares in the book, which isn't significant, but for a stock like UPS, it's something. There's something there. I mean, I'm looking at the book all the way up to 107.50, and there's like nothing in the book except that 105. There's a couple hundred shares here, a couple hundred shares there, and there's 9,200 at 105.
Now, what do you got UPS print off right now?
On UPS?
Yeah.
103.34, just an odd lot just traded there. Actually, no, there's been no trades. That was last night, or that was on Friday's close. There's been zero trades here on UPS this morning.
Okay.
So we haven't had a trade on UPS yet. On FedEx, we did just have an odd lot trade this morning at 143.02. Actually, it was 100 shares trade at 143.02. Bid fund at 143.05, but it's pretty early for those stocks. It's only 8:30 or 8:23 here right now. Typically, those aren't like an Apple or Bank of America or something. There's not a lot of pre-market usually on those things. $100 stocks usually tend to be a little less liquid too. So unless there's news or something in the sector, usually there isn't a lot of pre-market action on those. But both these stocks look good from a technical perspective, as long as those breakouts don't become fake-outs on you.
All right, let's talk about what is the debacle of last week and the holiday season so far, and that's the Target Corporation, TGT. We had obviously over what was it, 40 million credit card numbers stolen. Huge breach in security. My brother-in-law, who's a big tech guy and he works at Apple, was talking to me about how just crazy beefed up the security at Target is, and it must have been an inside job based off all of these precautions they put in place. And then JP Morgan comes out and says that they are going to be like freezing accounts through Chase, their bank, their retail bank, because of the Target debacle. So, Dennis, what are you seeing in the chart with TGT this morning?
Yeah, TGT, we're actually down here about, we're trading a lot of odd lots here at 62.22. It's funny looking at these odd lots here. Every time I look, there's an odd lot trading because we didn't see that 2 weeks ago. Now that the odd lots hit the tape, they just started hitting it December 7th. But we just saw an 80 share trade at 62.22. But then before that, there was 800 shares trading there. So we're down about 30 cents here again. I think it is the JP Morgan headline hitting it. They are saying they're going to limit debit card withdrawals there. So obviously, that's not good for the company here, and kind of probably ticking a few people off that are shopping there too and looking to get some cash out for the holiday season. It's like, oh, we got to limit your withdrawals here because there's a security breach here. We'd be like, I maybe don't want to use my credit card at Target if that's a security
Mm-hmm.
breach. So that's the thinking behind it all. And obviously the stock trading down 30 cents here right now, 62.49. I'm looking to, there's one big number here. It's $62. It's a big whole number, but you got to 61.98 on the 19th, and then you got to 62.02 on Friday. So you basically have a double bottom in their place right at $62. If that gets taken out, there's not much till 61.44. So I'm looking for that 62 to hold if I'm trying to play it from the long side. So it's trading 61.90, 61.80. I think it could cascade through a lot of the 61 handle. So 62 needs to hold if you're picking bottoms in Target.
And I was trying to pull up what the actual withdrawals were. I think that if it's a debit, you're limited to a couple or few $100 per day, and if you're using the credit, it's limited to like $500 per day. So, I mean, that's especially during the shopping holiday season. That's not a whole hell of a lot of money.
No, it's not. So this is probably the worst time of year for this to happen here too for Target. So obviously this is where they make their years. A lot of these stores is with all the selling. If you got people that are a little bit, I don't want to shop at Target because I heard about this whole thing. Not good for the company, happening probably at the worst possible time. So let's just talk about Walmart with it, obviously, because Walmart, Target, we know, do move together. The Walmart chart is interesting, WMT, because it put in a double bottom here too. So we're looking at some of these little setups here. 77.20 was the low on the 19th. 77.25 was the low on Friday. So you got two stocks there that basically are put in a double bottom here. So obviously support's very well defined here for Walmart at 77.20. That's the level that needs to hold. Actually, funny thing is resistance is pretty well defined on this one too. Walmart 77.98 the high 3 days ago, 77.83 and 77.88. So you have three highs within 17 cents of each other. So looking at that 77.20 area of support, and the whole $78 area continues to remain a little bit of resistance there in Walmart.
And she's down a little bit after Friday as well, eh?
Pardon me?
Walmart's down a little bit after on Friday, kind of selling off right into the close.
Yeah, we had and we should talk about that actually, Kyle, because it was interesting enough. We had a lot of sell imbalances, despite the market being up there and making new highs on Friday. You had a lot of individual stocks coming out with sell imbalances. These were market on close sell orders that came into the market, and that information gets disseminated to the public market at 3:45. So we've talked about imbalances before, but just a quick refresher if you guys just wanted to know what those are all about. Basically, if you have these imbalances come out at 3:45, and it's just order flow imbalances, if there is more buy orders, market on close buy orders. Let's say, just for example, there's 100,000 shares to buy market on close and 50,000 shares to sell market on close. That stock would have a 50,000 share buy imbalance. So what happened on Friday is you had a lot of sell imbalances come in. So there was more stock to sell on the close than there was to buy. And this actually knocked the price down of a lot of stocks. So if we look at just the individual trading and a lot of issues on Friday, a stock like Walmart had a pretty significant sell imbalance. I actually sold off about 15, 20 cents there just in the last 15 or 20 minutes. But some other stocks had some big moves here. If we look at a stock like IBM, for instance, that stock actually was trading up around 182. And actually this imbalance information is disseminated to the market at 3:45. But on the floor, this information starts coming out as early as 2 o'clock. So at 2 o'clock, they already know, well, we could have a weak close because there's some sell imbalances here. So interesting enough, if you look at the chart of IBM, at 2 o'clock, it was trading up around 180, 165. Then it started to drift down, drift down, drift down. Sold off about $1 over the course of the next hour and a half. The sell imbalance comes out, actually knocks it down on the closing print down to 180. The closing price was 180.02, knocking it down another 60 cents. So you basically had about $1.50 sell off there just from the sell imbalance in IBM. Some other interesting ones were like Disney had a big sell imbalance. It sold off basically 70 cents over the course of the last hour. You had a stock like Bank America sell off 13, 14 cents, which is a 1% move from 15.75 all the way down to 15.60 in the last hour as well. A lot of these stocks, a lot of these moves are usually just order flow based. And a lot of times what you see is these moves, actually, these stocks sometimes get these moves back. We're seeing it in Bank America this morning. 15.74 is where it's trading right now. It went out at 15.60, so it's up 14 cents here, and basically getting back all of its losses. But the market is up 9 points, so that's helping the cause as well. But we had a pretty weak close there. A lot of times the designated market makers on the floor come in and they buy those closes because they have to provide liquidity into it. You get other participants, opportunistic traders, buying the closes because they know it's just order flow based. So it's not all that surprising that we're actually up here this morning on the overall market and up on a lot of these stocks.
Dennis, where can you get that data?
It's tricky. It's prop data, so it depends. I believe Interactive Brokers, some of the retail firms do sell it. Some of your retail do sell that information. So you just ask who your broker, if they have the imbalance data. You usually have to pay extra for it. They don't just give that information away, but you can get it. Also, usually I tweet out actually. So if you follow me on Twitter, I'm Triple D Trader. Usually what I do, probably 4 out of 5 days, is at 3:45. I usually tweet the top 10. So like what I see, as being significant there. So I'll pop in and I'll give the actual numbers to try to tell you. And if you looked at my tweets on Friday, I was saying just that. I had the Disney in there, and I was saying basically, these got some big sell imbalances, and these could actually move the prices down here in the next 15 minutes and into the close. And that's huge information. Now, I will tell you, this information probably 10 years ago was a lot more valuable than it is today. A lot of funny things happen with them. These things get manipulated, they get played with. There's a lot of games, and sometimes they just get sometimes they actually get offset too. So you'll see like 50,000 shares to sell, and then some other institution will come in. Oh, he wants to sell 50,000. I want to buy 50,000. I'm going to come in and place my buy order here now near the close and get those 50,000 shares, because there's institutions looking for liquidity too. Like that's why they advertise this information, is they're looking for an offsetting order to help with this imbalance. So if you saw a stock even like I'm just trying to see here. We actually had a few other moves. I wrote them down. Like Berkshire Hathaway, BRK.B was another one too. It gapped down $1 on the close, but a lot of times that's basically what they're doing. They're advertising, looking for offsetting interest. And the big thing for you to know is that if you don't have this information, some funny things can happen after 3:45. You can see some fun moves, but for the most part, it's usually pretty quiet, except for certain days of the month. The third Friday of the month, usually there's some significant imbalance action. At the end of the quarters, it's always huge. And then you have the Russell rebalance, which is usually the last Friday in June. Those are big days. So write those down. If you're, those are the big days where these imbalance plays can really move stocks around.
So you said
So
the
third Friday of the month,
third Friday
end
is
of the month.
options expiration.
Yeah, options expiration, third Friday of the month, the very end of the month. So I would say the end of the month, the end of the quarter is enormous. So, but the end of the month is big too. So the last trading day of the month, and then the probably the biggest imbalance day of the year is usually the Russell rebalance, which is on the last Friday in June. So those are the days you want to write down. Other days, usually, the odd day you might just have something happen, but for the most part, probably 8 out of 10 or 9 out of 10 days these imbalances get offset. And they're not. It's really a non-event. So those are the days you really want to watch. Chelsea she's in the chat room asking about ARIA here this morning. Brent, you got the news on ARIA? Because I know it's popping up here. It's popping up 50 cents here this morning. I didn't grab it from the chat, but maybe Brent can go hunt down what that headline is.
I'm hunting. I'm searching.
Yeah,
Brent's hunting. We can tell you about ARIA here. It actually has been coming back. Here's one. Had a huge gap down. Look at this chart there, Kyle. Back in October, we went from like $16 on bad news. I remember covering it that day, and it was down like, I don't know, like $5 or $4 or something. Has found great support through November in the $2 area, and here it's funny, started popping up, and now it's continuing to pop up here again. So resistance is tricky on this one, just because you're in a whole gap area here. So the stock is coming back quite a bit from its November lows.
Over the weekend, I'm seeing numerous sources kind of reiterating the iCluSig news That was from late last week, but this morning I'm seeing I'm seeing at least 2 upgrades this morning.
Who's upgrading it?
We got Chardon Capital, and then also a little more notably William Blair. It looks like William Blair, they got an outperform rating on the stock now.
Do they get price targets on it?
Yeah, I'm sure. Let me see if I can pull those up real quick. So William Blair boosting the target from $3 to, are you ready for this? $12.
Whoa!
Heyo. Yeah.
That's a big one.
And then I don't see details on the Chardon price
Did they
target
say
yet.
why, Brent?
I'm sure they did. I haven't actually dove into that William Blair note right yet, but I can go click it right now and come back with some more details for you guys.
I can tell you, we've traded. This is one of the most active stocks here this morning. We've traded 3.1 million shares here this morning. So this thing is trading like crazy. It has been as high as 763. So that's one concern here, is that I'm looking at Friday's high of 775, and then I'm looking at an after-hours high of 763. So if you use that after-hours or pre-market high of 763, so if you use that pre-market action here coupled with Friday's high, there's some resistance up there in the sevens. I also never like to see a stock giving back 60, 70 cents of its gains. That's 2/3 of its gains from this morning here, and now obviously only trading up 50 cents. So that is concerning here as well. But you know, you look here, this thing had a wild range on Friday, $5.67 all the way to 7.75. So I can pretty much guarantee you it's probably going to be a pretty wild day here for the stock again. Wouldn't surprise me if this thing had over $1 range too. So
And this thing trades 28 million shares a day too, so it's not it's a traded stock. Pretty, you know, dollar move today wouldn't be that crazy after Friday's move.
yeah, I think you're going to see some volatility here for sure. It's starting to open up. It was, you know, basically everybody had it for dead there in November, and it got a little life towards the end of November, consolidated around that $5 area for the pretty much the bulk of December until just Thursday started breaking out, and then Friday just took off, obviously. And, you know, here we are. We're still going to be volatile here this morning, it looks like. Few other ones I wanted to talk about here, and some of these dogs have just been barking here, man. I'm looking at Sprint. Look at this chart of Sprint here, S. This is a stock that, again, middle of the year here, wasn't doing much. Stock that really just hasn't, you know, been that great of a performer. Got down to the $6 area in October, but ever since then we put in 3-4 bottoms in middle of October. We have just been marching and marching, marching. And actually, Sprint is a double-digit stock here this morning again. It is trading at 10.15 right now after closing at 9.86. It's a 3-day tear this thing has been on. I will tell you, $10 is still significant here. I see 77,000 shares in the book at $10. Now, it looks like it's probably going to try to take that out on the opening print, but sometimes what you'll see is a stock price and trade pretty heavily above 10, and then as the close comes, or as the open comes, and that liquidity, that $10 I see on the book becomes active at 9:30, that can sometimes hold your opening price down, which can give you a chance to get in, you know, on a long at a pretty decent price. So I might be interested in buying this thing if this thing takes out $10, and if I can get in on the cheap, if I can get this thing at 10.01 or 10.02 or 10.03 on an NYSE open, maybe this thing does trade higher. Obviously, starts trading down and taking out, you know, the 9.86 settlement, then I would get concerned though.
Dennis, are you just trading stocks, or are you going to be trading any options on there too?
I typically do trade options, but I'm a more active options trader actually on the expirations or getting near the expirations. We just had the Friday go by here, so I used to like to, you know, take little gambles. I almost call it like I trade like a lottery ticket strategy kind of, where I'll look, you know, and I don't want to pay a month worth of time premium. Sometimes I'll play the weeklies a little bit, but obviously we don't have weeklies on everything. We do on Sprint though, but I usually like playing the options a little bit more it depends. I'll tell you, when the VIX is, you know, back in 2008, 2009, I was a net option writer because the VIX was high and they were really paying me to write options, and they were really expensive to buy options back then because there was so much volatility. But when the VIX is sitting down here at 12 or 13 or 14, it's pretty cheap. Options are pretty cheap. So what I usually try to do is try to find options, stocks that haven't moved yet, but I think are going to move, and maybe buy like a little outside of the money call on something and play it that way. And, you know, it's because I'm not paying as much premium, and some of these things work out. And still, 4 out of 5 probably expire worthless on me, but that one often, you know, will make up for the 4 out of 5 that I'm losing on. So that's how I play the options. But typically after an option expiration, I'm not very active in the options. So
there's a really good educational point too. Can you explain what you mean by when the VIX is low, that's when you usually buy them because it's when you'll get them at a good premium?
Yeah, so basically options, there obviously there's the different components that are pricing your options are volatility, which is what I'm going to talk about here in a second, and then actual stock price. If you've got the $12 and as the stock moves from 11 to 11.50, your option's going to increase in value because there's a higher likelihood, obviously, that it's going to close in the money. But the other component is volatility. If stocks aren't very volatile, if the VIX is very, very low, um, then options are cheaper because people aren't pricing, and the likelihood of your option closing in the money is less because the stocks aren't moving around as much. So what I say is when VIX is really low, they're not paying you very much. The premiums are a lot lower to be a net option writer. So I like to be a net option buyer actually when the VIX is low, and I like to be a net option seller when the VIX is high. Now the VIX has been low for the last year here, so that's why I kind of play it a little bit, differently. And you can look at individual stocks. Some always have volatility premiums. If you're buying options on Netflix and Facebooks and stuff, those things are always expensive. I'm not talking about going out, you got to look at the individual volatility on each individual issue. But I'm saying when the VIX is low overall, if you're looking just at an average stock, it's actually not that expensive to play that little lottery ticket strategy that I like playing. And if you can predict, what I try to do is predict stocks that are going to get volatile. And you can't look at like an earnings event because that'll be priced in. If a stock has earnings 2 days from now, they will price that into the option, that excessive volatility that's going to happen from that earnings report. But if you're looking just at an average stock and saying, "Oh, this has been consolidating for 3 or 4 days. I think it's ready for a move here," that's when you might be able to, catch, an option pretty cheap, and take a shot. And like I said, it's a shot in the dark. Derek, it's a lottery ticket strategy. I know my buddy Chris, who's a huge option trader. We'll get him back on the show. We had him on a couple of weeks ago. Chris Banier. He doesn't even like to play option. He doesn't really like to pay spreads at all. So usually, what he'll do is buy an option and sell a higher strike. He'll play the spreads to try to limit that premium and try to get it, almost to nothing if he can. So that he's not, paying out. Where I'm kind of buying, options a few days before they expire. I'm buying nickel options, 10-cent options, and looking to know that, well, if I buy an option at a nickel, and if 4 out of 5 expire worthless, but one of those can go to 25 cents for me, I break even. I know I had a couple last month actually that went up to over $1. I had paid like 10 cents for them, they went to $1. So those really work out. I had this like option. I think I even won on FTEK. I had the 750 calls I had on this thing. And I had bought this basically back when the stock was at $6, and I had bought this like a month out, and I think I paid a dime for it. But the volatility was starting to increase in this one, and it actually got up to 750, and then broke out, and it got up to over $9. I sold the stock against it, so I didn't actually sell the option. I sold the stock against it, but I sold I think around like 870 or 880 or something. So I actually made it like $1.25 on that option. I think I'd paid like 15 cents or something for it. So it was a good option trade for me. But I had a lot of other ones that expired worthless too. So overall, I think last month I was slightly green, but it's the strategy. It's just a different strategy. I always employ lots of different strategies in my trading, and this is just another one there. So basically, when the VIX is lower, I look, at more lottery ticket type strategies, type of deal. So.
Interesting. That's a good lesson. That's a really good lesson. And we got a few minutes here before we bring Adam Button on here, the editor at Forex Live. But why don't you? I just pulled the headline. Gold's 13-year bull run breaks with 29% annual loss, and 2014 could be another year mimicking this year's. What are you seeing in gold right now, Dennis?
Well, we're trading down here another $3-4 here. Well, we've come back a little bit. We're only trading down $3 here now. But just looking at gold, it's obviously had a really ugly year here. I'm more of an equities trader. I'm not a big futures trader, but I use the futures as indicators. Obviously, the number one indicator I use for everything is the S&P futures. But I always keep the gold futures up there too. But I do often like to trade the individual stocks like the BBRY and the NEM and the GG off of the gold price here. And you are sitting down here near the lows of the year for gold. If you look at the individual charts on ABX, if you look at the individual charts on NEM, if you look at the individual charts on GG, all of those stocks are sitting down near their lows of the year. Gold Corp here, GG, trading down at 2092, 2106 this morning, up a few cents here. But definitely concerning that obviously these stocks, the biggest concern here for the individual miners, and we've talked about this before, is the cost of production. The cost of production has climbed over the course of the last 3 or 4 years for most of these miners. It's anywhere from $1,000 to $1,200, depending on the company. So as the gold price falls, if we went, and some people were predicting that gold could go from $1,200 to $1,000, all of these miners would probably not be making money at those prices. They'd be pulling it out of the ground and losing. So then it becomes, they got to scale back operations, and obviously it's a whole concern here. If gold can somehow turn around, and I think the only catalyst that's going to turn around gold, it's a defensive play, is if this market starts to show weakness. And that's the biggest problem for the gold bugs right now, is the fact that the market continues to make all-time highs, and gold is a defensive play. So gold is probably going to continue to be out of favor as long as this S&P futures continue to make new all-time highs. And the concerning thing is, if gold continues to fall here, the individual miners are going to get into a position where they may not be making money. So that's my concern there with the individual miners too. So you can look at these things and say, oh, the PEs on some of these miners are pretty cheap. Well, PEs go to meaningless information when you start losing
Yeah,
money. So
and their
that's
costs
the
their costs
concern.
are going through the roof. I traded ABX early in the year and got killed on it.
Yeah, ABX has been a terrible one actually, and this is one I run a portfolio for my wife and I. I've got probably about 80 stocks in the portfolio, and this is an investment portfolio completely different than trading. And I try to do the whole diversification thing, and I've got a little bit of Barrick in there. I think it's like maybe like 2% of my portfolio. It's been terrible, man.
Hmm.
That Barrick stock, I started picking it up for the diversification around 30, and I actually ended up selling some of the position out at 21. I was like, I don't even want to own
She
this thing. I
ripped
think I
down to
could
like 13. Now she's back, went back up to 18.
16
Yep.
or whatever. Yeah, 1660. It's been terrible. And I mean, that's the whole thing, is that they're just not making a ton of money. I think Barrick's cost production is a little bit lower than some of the other ones. I think it's somewhere between 1,000 and 1,100. They always update it every quarter. I didn't see what it was updated to last quarter there, but I think it's like in the 1050 or 1080 area. So they're still making some money here. But I mean, when gold's up at 1,900, these things are raking it in.
Yeah,
So
and
it's a
down to
big difference
24,
between.
29% over the year, and now they're. I mean, that's just straight off the top line.
Yeah, exactly. So you just got concerns there all over the place if you're on these individual miners, especially if gold does go to $1,000 or something. I don't know if I see that happening, but I definitely don't see gold coming back into favor as long as this market continues to rally here.
Well, all right. Well, we got 8:46 right now. We're going to take a break and then bring on Mr. Adam Button, and we will be right back talking with the analyst editor from Forex Live, talk some currencies and a little bit of macro strategies, and hopefully get some of his predictions going into 2014. So we're going to take a break, and we'll be back with you guys in just a sec. All right, welcome back, traders. Kyle Bazzi here with Dennis Dick. I'm subbing in for Joel Connon, and with us on the show this morning we have Mr. Adam Button, the editor and analyst from Forex Live. Good morning. How's it going, Adam?
It's a long morning so far, but glad to be with you guys.
So that's what you're
What?
telling us. What's been going on over the last 25 hours?
A little bit of an ice storm hit eastern Canada, and it's just snarled air traffic. Right. Everything goes through Toronto, and it's just stopped there. And flights are full around this time of year anyway, and so give it up on air traffic. I couldn't get anywhere for a couple of days, so now it's train traffic was full too, and now it's onto the bus. So I'm on a Greyhound on the road here, halfway between Ottawa and Toronto.
Wow. No, I saw pictures there from that ice storm. That is absolutely incredible there. You got like trees smashing through car windows, trees falling on houses. It was a crazy ice storm. Funny thing is down here, Detroit, Windsor area, I'm actually in Windsor, but they were talking about this ice storm coming in, and we just stayed just warm enough that it was just rain for us. We were about 2 degrees, train 34, 35, so we were just above freezing. So I guess we got lucky here, but holy cow, looking at the pictures up there from that Toronto area, and they just got slammed.
Yeah, I mean, it's people skating down the streets. They said here. I mean, I got in late last night, and it seemed fairly warm out, or right around freezing. But I guess that's the problem, just around freezing temperature, and that's it. Nothing runs, nothing works. So we're going to try to make the best of it. And for markets, it's not such a bad day to miss out on. We had a bit of data come out, and other than that, it's going to be a quiet day. So take it as it comes, and try to get home for the holidays.
Now, wait, did you say you're on a Greyhound bus right now?
Yeah, that's right.
So everyone's listening to the show sitting around you.
Yeah, is that the Benzinga first? Your interview from the Greyhound.
There we go.
That's awesome.
Gotta make it there as fast as I can. So.
Well, you sound good, actually. You sound crisp here, so that's good that you're coming. I don't hear no bus noises in the background, so. Which currency? So you're a currency trader and currency strategist there. Which currencies do you focus on there, Adam?
Yeah, mostly trading the euro, the yen, dollar, Canadian dollar, Aussie dollar. Let's stick to those two. Stick to those ones in the sterling, and bounce it around and try to pick up a few pips here and there, and stay on top of the news is really the name of the game for us.
So are you a short-term, like scalper type trader? Or are you a day trader? Are you a swing trader? Like, what's the time frame that you're trading these currencies?
For analysis, we try to help anyone trade sort of any kind of timeline, but not so much scalp. You want to be in and out, in a matter of hours, for the most part, or holding trades for days or weeks as well. But a lot of times, based on some sort of macro theme or around some sort of data or technical level, breaking in the market is what we cater towards.
Now, which currency are you really looking at here as, what do you like going into 2014 here? Which currencies are you bullish?
We're at the tail end of a really impressive wave here, or really on it. It's hard to say it's the tail end. I think it's the tail end. The Japanese yen has been dropping now. If you look at sterling against the yen, it's 8 weeks in a row of gains. Euro yen 6 weeks in a row, dollar yen 8 weeks, consecutive weeks of gains, and those kind of trends, eventually have to end around this time of year. Generally like to end anyway because there's so little trading. So that's really the theme going into next year: is the weakening yen, a stronger dollar, stronger euro, and it's a very crowded trade at this point, but it's a trade that's based a lot on Japanese, continuing to print money, a little bit of a recovery in Europe and in England, and a recovery in America as well. So we like that trade to continue, but it's very difficult to get in at the moment. There's so much momentum behind you. It's such a crowded trade. So we look for that to correct, in the next 2 weeks, 3 weeks, and hopefully get a bounce down for a bit of better entry point, and then try to ride that or try to pick that up again.
Now, looking here, obviously we had Bernanke do some tapering here, a little bit of tapering. I guess Kyle's calling it the tea and tapering there. Now, what do you see going forward here? Is this going to continue to help the U.S. dollar? That obviously the tapering has begun. Is this good for the currency in your opinion here, or was the tapering just a little bit too light?
No, it's going to be good news. I mean, you look, January is going to be here fairly quickly. We're going to get a bit more tapering then in March. You know, what you really have to keep a close eye on is growth data and inflation data. And you know, the consensus is getting quite positive about the U.S. You know, predictions above 3% growth next year. And until we see something a bit more sustainable in the data, that can be vulnerable. And the other one is inflation. You know, we just had PCE data out at 5:30 here. And on the core side, it was soft. And if inflation stays low or stubbornly low, you know, it's difficult to see the dollar really putting in a banner year. But, you know, if we can compare it to Japan, we compare it elsewhere, it looks good again. You know, another one I didn't mention is Australia. You know, it's coming off a lot of years of very, very good growth. And we have that one again, Australian dollar down 9 weeks in a row against the U.S. dollar.
Wow.
And you know that's a record. It's never fallen 9 weeks in a row since it was floated in the 70s. And so we're looking for a bounce there. But the U.S. dollar looks very good against some of these things. You know, Canadian dollar as well. It's had that sort of run to the downside. And the danger is it's a crowded trade. You know, Goldman Sachs has been talking about Canadian dollar weakness. Seems like everybody's been talking about Canadian dollar weakness, and same as Aussie weakness. So you don't want to be the last guy into that trade. Risk a little bit of a bounce in your face. If you can get those ones at better levels, I mean, it's all set up very nicely. It's the Fed working for you now if you want to be long dollars, and you just have to watch the macro side and keep an eye on stocks and make sure you try to manage the risk.
Now, Adam, that was something you touched on inflation, and the one surprise that everyone was talking about last week was we might have Dennis said we got the tea and taper with them taking out 10 billion off off printing money each month, but the short-term interest rate, they said they're not going to move that for a foreseeable amount of time due to the unemployment rate, and a lot of that had to do with the inflation not getting to 2% right now. And what I was talking about last week a lot was wage inflation. We might be seeing prices getting higher, but we're not seeing anybody asking for higher salaries because they're still just happy to have a job. And one of the main reasons was that we might be seeing unemployment drop, but it's a lot of the low-income jobs, not where we want to see the medium income, and that's dropped $4,000 from $55,000 per year to $51,000 from 2010 till now. What do you need to see from inflation over the next, let's say, 2014 for an even stronger dollar?
Yeah, I mean that's the sort of element that just isn't going to come. I don't think that wage inflation and it's a bit of a conundrum. You're going to have a growing economy. There's so many discouraged workers, so many workers working below really where they should be. And then if you look at something like manufacturing, a lot of those $25 an hour jobs are $15 an hour jobs now. For that to happen, I think we're going to need sustained growth over a number of years for that to sort of add to wage pressures. And in the cards for this year, I don't see that coming in any way, really. Where we might see some inflation is in housing. There's not that much optimism on housing left anymore. We had 10, 12% rally in house prices this year. But that could have some upside if people start to see mortgage rates go up and maybe crowd in, or people have been sitting on the sidelines waiting for a bit more certainty in the economy step in. But wage inflation, unfortunately, isn't there, and that's really, in a way, you want to see it get back to at least where it was before the crisis, and moving in the right direction. In a sort of soft 2-3% range a year at least, but I don't see any sort of foreseeable path to that, not in a globalized world, and everything with Obamacare, slowing it down as well. So uncertainty there, and unfortunately, the wage growth just isn't happening.
Now, do you see this? Let's just take you to the S&P futures here for a bit. Obviously, we're making new all-time highs in the market. I've always followed the currency along, and I'm an equities trader, so I focus there. But I always keep an eye on the currency, especially the Canadian dollar, because I got the Canadian backing too. But what I saw back in the financial crisis was typically, obviously, they were selling. They were actually buying U.S. dollars back then when the market was selling off. And then what we saw for the last couple of years, not in the last 6 months, but if I'm going back like 2012, early 2013, even in 2011, as the market rallied, the U.S. dollar would sell off. We're not seeing that here in the last few months. Why do you think that trade is kind of reversed?
Yeah, and it's genuine optimism about the United States. A lot of the times previously it was good for the America to have a softer dollar. You had this risk-on, risk-off trade as
Yeah.
American money moves back out. These are genuine bets on the United States economy right now, and these big cap companies. It's a great place to do business. It is, unfortunately for the companies, or fortunately for the companies that work there, the wages are lower. And if you look at it now from an international investor, Canadian investor, I mean, you've got a 27% rally in the market this year, plus 8% on the currency or more, even more if you're a Japanese investor. You're about even in Europe. But if you start to see that move higher again with the U.S. dollar, then you get some more money flooding in back into the United States. And so it becomes a bit of a virtuous circle, I think, for the United States dollar. And it's great news for equity traders as well. So, yeah, it is one of those sort of trends, and the market will go through themes for 5 or 6 years over history, and you see, well, everything will correlate one way, and then it'll go another way, and a lot of it's to do with the tapering and the Fed getting out of the way, and it'll be interesting to see how the bond market reacts. We're not seeing a big sell-off we saw in bonds, and 10-year yields are still close to that 3% mark, and when they hit that could start to change things a little bit in terms of the equity market.
What do you see for interest rates here? Do you think interest rates continue to rise here? Short-term rates going up there, obviously, as the tapering comes back, or what's your outlook for interest rates?
Yeah, I think it has to move higher. You do have that. On the one hand, you have money coming in the United States, but on the other, with the Fed taking away support, it has to go up and test 3%, and we'll see what happens from there. I mean, year end, it might probably not happen, and then the start of the year, you have some money flushing around as well. So it's probably going to take 3 weeks before we get a real good read on where rates are headed. But at that point, if you start to get rates moving higher, I think you get to see some momentum in that trade as shorts pile in, and funds get worried about holding bonds.
Now, Adam, right before you came on, we were just talking about the gold's 13-year bull run coming to an end this year with 29% annual loss. Can you talk about that and what you're seeing that do to any of the currencies you're trading, and what's your outlook for gold in 2014?
The gold rally was built on 3 or 4 sort of pillars. One was fear about inflation, which has never materialized, and now we're having a bit of a deflationary cycle. Number 2, deficits. Deficits are moving in the right direction now, even in Europe, which is farther behind the United States. You had fear about some catastrophic economic outcomes was another. All these tail risks, and those are receding as well. And so you don't have the sort of, and then I guess the final one would be printing, and that's sort of the final leg that was left on the table, and that's been cut out now. So, if you were a gold bull, you don't really have that sort of strong, enthusiastic case, or even that you used to have with the gold bugs, yelling and screaming about all these things that were coming. And so now, with the central banks aren't buying, it's very difficult to get excited about gold for 2014. Again, we see that in the price. It's at 29% down. The next shoe to drop is production. Unless production starts to decline, mines start to shut down, and we see a little bit of that, then you have a floor under prices. And I think when you see some large-scale shutdowns, that might be the time to buy. We hear around 1080 is a spot where profitability becomes extremely strained in some mines. So that's a level that I'm looking for, and maybe it's a place to buy.
1080. So that would not be good news for gold bugs here again. I think you're right. I think it's just gold is all about the fear trade, and like those 4 pillars, like you're talking about that. But that's all based on fear here, and there's just not the fear out there. So obviously, and what's your outlook for the overall S&P for next year? Do you think we're going to continue to climb here on the S&P as well?
Yeah. If you look at rallies, I look at 20-25% gains over the last 30 years in the S&P 500, and you're looking going into December, they tend to run through December, and they tend to run early into the next year as well.
Yeah.
January, February are such
Right.
strong months seasonally. Markets like this don't tend to end with a sharp sell-off. They tend to flatten out at the very worst. So, you watch the financial TV, you see so much enthusiasm about the economy, and I just see money just flooding in at the start of the year. I think there's another 10% here, whether it's justified or not. And, it's going to come early in the year. And then after that point, we're going to really need to see the economy, doing something in the right direction or sustain it. Otherwise, we'll probably have a correction.
Now I'm on Dennis. I'm on forexlive.com right now, where Adam is the editor, and I'm reading October Canadian GDP point 0.3 versus point 0.2 expected month over month. So there's your Canadian economic point of the day.
Yeah, yeah, there we
What's
go. Canada's, it's chugging along, but it's one of those trades just kind of rides on U.S. growth, and we're going to need to see that again. But the Canadian dollar is a little bit on a soft footing. We went over to 107 on Friday, and it sort of kicked off it, even though we had good economic data out of the U.S. and the U.S. GDP report. So, maybe time for a correction, but at this time of year, you tend not to take the signal, too literally when you see in the market, because it's so light, so flow driven that it's hard to really believe anything is behind anything at all.
So I'm looking at the Canadian US dollar here, and it's right around the 106 area. This is the one I'm always interested in the most in, because I am Canadian and live in Canada, obviously trading US stocks. So I'm always end up converting, my US to Canadian. What do you think I should do here? Should I be hoarding Canadian dollar or US dollars? Do you think they go higher here against the Canadian, or what's your outlook here for the Canadian dollar?
Yeah, I think if you see anything around 105 as a Canadian trader, you want to start to get into U.S. On the other hand, it's probably a better year for the Canadian equity market than it was last year, so there's probably some opportunity here. Commodities are a little deep down, maybe a little bit early in some of those, like I said, in gold, probably too early. So 105 is probably a nice spot to pick it up and stick with it, and let's see if we can get up to 110, 114. That will really take something from the American economy. There is no inflation. If there's no inflation in the U.S., there's even less in Canada. So I'd say Canada's really the canary in the coal mine on the inflation front. Barely 0.8% inflation year over year in Canada. And, the Bank of Canada's on the sidelines, so the Canadian dollar has really no reason to rally.
Well, Dennis, I know you're talking about you need to jump up at 9:05. You do need to get off, or I figure.
I'm actually going to hop off here. I always take off and try to trade this open there. So, Adam, thanks a lot there. Really appreciate that.
Adam Button from Forex Live. Adam, now if I hop over to your website, I see one little ad on the right saying "Get Adam Button's Secrets to Trading the News" if you sign up and don't miss a thing. So I want to know a couple of those secrets on our next conversation, dude.
Okay,
I want to stick around and know those secrets too.
Well, great, man. Thanks.
Thanks so much for having me.
Yep, I'm glad you could get on, even though you're on the Greyhound bus right now.
Yeah, nice and quiet on here. So, rest up and enjoy the holidays, guys.
All right, happy holidays, Adam. Dennis, good luck trading near the open here. Folks, we're going to take a 2-second break, and we'll be back with you in just a second. All right, folks, we're back with the mighty Joe Young with the editorial headlines of December 23rd. Joe, tell us what's going on.
Thanks a lot, Kyle, and thanks for Adam Button. Thank you, Adam Button, for coming on the show today. That was really cool. He did it from his cell phone on a Greyhound bus.
Not too shabby.
Not too shabby indeed. Moving around the world with today's editorial headlines, hackers have released a jailbreak for Apple's latest mobile operating system, iOS 7, allowing iPhone and iPad users to download apps, extensions, and themes that are not available through the official Apple App Store. The Invasion jailbreak, developed by a group known as Evaders, with a 3 instead of an E, claims to work on an iPhone, iPad, or iPod running iOS 7.0 through to 7.0.4. It takes 5 minutes to install via a USB cable connecting the user's device to a computer running Windows, Mac, OS X, or Linux. However, the software has already struck some hurdles, including incompatibility with some software offered in Cydia, the preferred app store for jailbroken phones, excuse me. Please always back up your phone before installing new tweaks from Cydia, as your iPhone could be stuck in the boot process, warned evaders. The situation will improve as developers will update their software. The evaders have also been criticized for entering into a commercial partnership with the Chinese app store Taig. As part of the agreement, Taig comes bundled with the evasion jailbreak software for people who download it in China, in a similar way that Cydia is bundled with the jailbreak elsewhere in the world. Aerospace and Defense Group Rolls-Royce said Britain's Serious Fraud Office, SFO, had launched a formal investigation into concerns raised a year ago of possible bribery and corruption in China and Indonesia. Rolls-Royce, the world's second largest maker of aircraft, said that last December it had passed information to the SFO relating to bribery and corruption involving intermediaries in overseas markets. Rolls-Royce said at the time that it could face prosecution over the allegations. We have been informed by the Serious Fraud Office that it has now commenced a formal investigation into these matters, Rolls-Royce said on Monday. Several GM and Ford automotive plants will take extra downtime around the holidays to help reduce inventory levels. Typical holiday shutdown includes closures next week, with employees returning to plants January 2nd or January 6th. However, some plants are closing for a week or two longer, especially those preparing for vehicle introductions. 5 GM plants in the U.S. and Canada will have additional downtime. Some of the closures are to reduce inventory of certain models, others are to tool up for new vehicles. Fiat CEO Sergio Marchionne restarted negotiations with the UAW Medical Trust to buy the remaining shares of Chrysler Group, 3 people familiar with the matter said. With an initial public offering of Chrysler on hold, Fiat executives met this week with representatives of the Retiree Healthcare Trust, said 2 of the people, who asked not to be identified because the talks are private. The meeting followed the trust's rejection of a higher offer for its 41.5% stake in Chrysler earlier this month, the sources said. The proposal was the first made by Fiat since August. Marchionne needs a deal to avoid an IPO, as that may lead to Fiat paying top dollar for Chrysler, said Vincenzo Longo, analyst at IG in Milan. Investors would appreciate a compromise between the trust demands and Fiat's offer. The government says 1 out of every 14 Americans aged 16 or older was a target or a victim of identity theft, a crime imposing heavy emotional toll on many of its victims. According to a national household survey of 70,000 people issued by the Bureau of Justice Statistics, identity theft resulted in $24.7 billion in financial losses last year. The crime affected 16.6 million people and fell most heavily on households with annual incomes of $75,000 or more. In that income bracket, 10% of such households were victimized. The survey counted both attempted and successful incidents of identity theft. 2/3 of identity theft victims experienced financial losses, which averaged $1,769. Tiffany & Company on Sunday said a Dutch arbitration court ruled that it must pay Swatch Group 402 million Swiss francs, or $448.79 million in damages over their failed joint venture to produce and market watches, and the New York-based jeweler slashed its profit outlook for the year. Swatch, the world's largest watchmaker, and Tiffany, a New York-based jeweler, had struck an agreement in 2007 to develop watches under the Tiffany brand together. The arrangement, intended to last for 20 years and give Tiffany a much bigger place in the luxury watch market, never turned into big business for either company, and the deal ended in acrimony in 2011. Snapchat is today rolling out its latest update, which will add a variety of new filters along with the ability to replay images a second time. Up until now, Snapchat only allowed users to look at an image once before it was deleted, but users can now choose one particular message every 24 hours to replay. You can only use the feature once every 24 hours. Those who send messages may also have to be a little more considerate over what they send. Despite the onslaught of Ron Burgundy in recent months, Anchorman 2 fell a little below studio estimates for its opening weekend. The movie made $26.8 million over the weekend, while estimates were in the $30 to $35 million range. The comedy has now taken $40 million since opening last Wednesday. It has performed better in its first weekend than its predecessor, which took $28.4 million in 2004. The second installment of Peter Jackson's three-part Hobbit adaptation took $31.5 million to remain at the top spot. In today's trivia tidbit, and a happy Festivus to us all on this 23rd day of December, the alternative to participating in the pressures and commercialism of the Christmas holiday season. Originally a family tradition of scriptwriter Dan O'Keefe, who worked on the American sitcom Seinfeld, the holiday entered popular culture after it was made the focus of a 1997 episode of the program. Festivus was conceived by editor and author Daniel O'Keefe, the father, and was celebrated by his family as early as 1966. In the original O'Keefe tradition, the holiday would take place in response to family tension any time from December to May. In 1982, Daniel O'Keefe wrote a book, Stolen Lightning, the Social Theory of Magic, that deals with idiosyncratic ritual and its social significance, a theme relevant to Festivus tradition. Some people, most of them inspired by the Seinfeld episode, have subsequently begun to celebrate the holiday with varying degrees of seriousness. We do it in my house. Yeah, that's right. Alan Salkin's 2005 book Festivus, The Holiday for the Rest of Us, chronicles the early adoption of Festivus. Rabbi Joshua Eli Plout's book A Kosher Christmas, 'Tis the Season to be Jewish, references Festivus along with hybrid holidays. In protest of a nativity scene at the Florida Capitol, one man has put up a Festivus pole with beer cans around it. Chaz Stevens drove about 450 miles from the Fort Lauderdale area just to put up the pole. "This is the most ridiculous thing I could come up with," said Stevens, an atheist. "This is about the separation of church and state. But because Florida considers the State House Rotunda to be a public forum, people can use the space to express themselves or protest as long as they first apply with a state agency." Along with the nativity scene and 6-foot Festivus pole, the Wisconsin-based Freedom from Religion Foundation has put up a banner advocating for the separation of government and religion. The Festivus pole is also on display at the Wisconsin Capitol, along with other displays. Just a reminder, ladies and gentlemen, that the show would not be possible without our dear friends at OptionsHouse, who will give you 150 commission-free trades just for signing up with an account through the links on this page. There's one at the top and the bottom right. Click on it, open an account through OptionsHouse, get 150 commission-free trades just because you listen to Benzinga's pre-market info. And that wraps it up for today's editorial headlines. I'm going to hand it over to Brent to give us some analyst ratings and movers before the opening bell.
Hey, Joe.
Thanks, Brent.
How's it going?
Pretty
this
good.
morning?
How are you?
We haven't really chatted that much this morning. I miss you.
Did you have a good weekend?
Yes, I had a good weekend. Thank you, sir. How about you?
I did. We had the family Christmas party yesterday,
Ooh.
and my gallon-sized flask went over pretty well with the gift exchange. So
Wait a second.
Yeah.
A gallon?
A gallon-sized flask. That's right.
I'm not understanding this fully, I don't think. A gallon-sized flask.
Yes, a flask that fits a gallon of liquid.
Wow. I didn't know there was such things out there
There
in
is.
this world.
I believe it came from Home Goods, and
Nice.
yeah, we did separate male-female gift exchanges this year instead of one big one. So, you know,
So was it an improvement? Or are you guys gonna go back to the old way?
I prefer the old way
Okay.
because I like everyone being in there, but
Yeah.
apparently there was some confusion this year, but it's a good thing we did it separately because the gifts were gender specific. So although anyone could have a gallon-sized flask, I wouldn't have done so well with a Coach purse had I wound up with it in the group exchange.
We could argue that.
Yeah. So, all right, take it away, my man.
Alrighty, sir. So I'm gonna hit you with some of the top upgrades, downgrades. I'm gonna also go over a couple of movers that traders should be looking out for this morning ahead of the open. A couple of the top upgrades this morning: J.P. Morgan upgrading shares of United Therapeutics, Uniform Tango Hotel Romeo. They are only upgrading it though because there was some news. The company over the weekend, late Friday, I think about 8 p.m. on Friday, the company announced an FDA approval for its hypertension product. United Therapeutic shares are up about 18% right now. This is good. It's two birds with one stone. I get to go over a top upgrade and also give you a mover. Fortinet, Foxtrot Tango November Tango, was upgraded by Baird to an outperform. Citigroup upgrading shares of KB Homes to neutral this morning. Let me check the price action on KB. Should be moving on that call. We got KB shares up about 2.25% this morning. Once again, upgrading that stock to a neutral. Shares of Ryder, ticker R, upgraded at Stevens to overweight. Piper Jaffray upgrading shares of Sarepta to, let's see, to neutral. So they did have the equivalent of a sell rating on there before. Investors, bulls this morning getting a bit of relief. Piper Jaffray maintaining a $20 price target on shares of Sarepta, and then shares of ARIA, we were talking about it a little bit earlier this morning. Stock is moving up on about 5.5%, getting upgraded at two firms this morning: Chardon Capital, a boutique firm, and a little more widely known firm, William Blair, upgrading shares of ARIA this morning. A couple of the top downgrades: Micron shares downgraded from neutral to underperform at Bank of America. The analyst there lowering his price target from 2050 to 1950 on shares of Micron. Did have a downgrade on shares of BlackBerry this morning. It was from Hudson Square. They downgraded the stock from hold to sell. Hudson Square not liking shares of BlackBerry right here, and we do only have BlackBerry shares trading out about 1/3%. Not a big move there. Hudson Square, like I said, a little more of a lesser known firm. BB&T downgraded shares of Coleman Cable to hold. That is ticker Charlie Charlie India X-Ray. JP Morgan downgrading shares of Navios Maritime, ticker November Mike Mike. This one was from overweight to neutral. Are you typing in tickers in the charts, Kyle?
I was not, Brent.
Oh, okay.
I
Sure,
can now.
no. I just heard you typing over there. It's like, holy cow, I'm going way too fast for him to be for him to be following these. Couple of the top new coverages this morning. We did have shares of Salesforce getting a new outperform rating and $62 price target at BMO Capital. Also, First Global initiating coverage on shares of Philip Morris International with a moderate outperform rating. And then we have, let's see, 1, 2, 3. I think we got 6 new ratings on extended stay. That is ticker STAY. Clever there with the ticker extended stay. Props to you. We got a Barclays analyst initiating coverage with an overweight rating and $30 price target. A Deutsche Bank analyst initiating a buy and $30 target. And then JP Morgan also coming in with an overweight rating. And then the neutral ratings. This morning we have Goldman with the neutral. We have Robert W. Baird with the neutral. And then Stifel Nicolaus initiating coverage on shares of stay with a hold rating. Let's see. We got the Low Street price target there at $23, and then both Barclays and Deutsche Bank with $30 price targets on shares of extended stay America. Also, heads up, we did have a Stifel Nicolaus analyst raising the price target on shares of Apple from $600 to $650 this morning, maintaining a buy rating. Shares of Apple, everyone loves to hear about Apple. We got Apple shares trading up 3% to 567.88 at last check. Heads up for a couple of economic data points on this abbreviated trading week. We will have a half day tomorrow. That means the market is going to be closing at 1 on Christmas Eve, and then the market will not be open on Wednesday. So traders get a little bit of a vacation this week. Thursday and Friday we're going to have full sessions just like normal. On Tuesday this week we're going to get new home sales, and then on Friday at the end of this week we're also going to get pending home sales. So watch that XHB, that is the home builder ETF, once again ticker XHB, X-Ray Hotel Bravo. Also on Wednesday, I believe, durable goods orders. We're getting a few data points this week, although it's going to be a relatively low volume week due to the holiday. We got, I don't know, about 7 minutes before the open. Hope traders are getting all set up to go. I do got a couple of movers that I'd like to go over really quickly. A little bit earlier, we had a deal from, it was from Seagate. Sandy Tango X-Ray will buy Xerotex X-Ray Romeo Tango X-Ray. That is ticker XRTX at $13.25 per share in cash. Shares of Xerotex trading up 27% at last check. A big move there. Shares of Seagate trading up just over a 0.5%, getting a bit of a bullish reaction in shares of Seagate. I guess bulls out there, longs in Seagate, are liking that purchase of Xerotex. Another one moving. Mentioned it a few minutes ago. United Therapeutics. They received approval late Friday for a product. Shares of United Therapeutics trading up about 21.5%. Also, Dynamics Research. This is ticker Delta Romeo Charlie Oscar. Will be purchased by Agility, a company named Agility, for $11.50 per share in cash. Shares of Dynamics Research trading up a whopping 58%. Right, that thing is going crazy right here. 11.43 the last trade. Bit of a discount there to that 11.50 per share offer by Agility. Not sure if the street is pricing in a bit of uncertainty here. Maybe they see a counter bid coming in, but the stock price is not trading up to that $11.50 right now. Shares of YRC Worldwide. Yankee Romeo Charlie Whiskey trading up 12% this morning. Last trade at 1680. YRC is moving on a WSJ report from Saturday, actually Sunday, saying that it could be close to getting $250 million in equity. If anyone's been following this YRC Worldwide story for some time, there has been liquidity issues there, liquidity concerns, and now WSJ reporting that they could be getting an infusion here. So we got shares of YRC Worldwide trading up over the 1650 level. I know that 1650, I'd been watching that level for about a couple weeks, and it had been an area of a little bit of resistance. So good to see it breaking through if you are a bull. Let me just check my movers list really quick, make sure I didn't miss anything.
How about Joseph A. Bank rejecting the bid from Men's
Thank you,
Warehouse
sir.
this
Yeah.
morning?
I knew there was another one. I knew there was another one. So let me pull up that news item really quick. We got Men's Warehouse shares trading down about 1.5%. Joseph A. Bank trading down about 1.75%. The news was just what Kyle said. Joseph A. Bank rejecting Men's Warehouse purchase. They are insisting that the price is undervalued. And let's see, Joseph A. Bank saying it will continue to review purchase opportunities. Joseph A. Bank sort of pounding the table this morning saying no soup for Men's Warehouse.
No soup.
I really did like the Festivus call. Joe, are you over there? I really did like the Festivus call too, buddy. That was great.
Well, I only have Shubs to thank for that.
Oh, Shubs.
I thought
Thanks.
we just celebrate privately in my family. I wasn't aware that. I mean, obviously it was a phenomenon because of Seinfeld. I just don't know too many other people that celebrate.
I would probably consider celebrating some Festivus.
Gotcha.
Festivus for the rest of us.
That's right. That's right.
I'm reading on the Joseph A. Bank bid rejection on Forbes. In a plot twist seemingly plucked from a romantic comedy today.
I mean,
because it wasn't Joseph A. Bank bidding for Men's, right? Then they switched.
Now Men's Warehouse wants to buy Joseph A. Bank.
And then Joseph A. Bank rejects its bid.
Yeah, that's a love triangle.
That is pretty intense. And both stocks are trading down this morning on the news. Robert Wilbrick, chairman of Joseph A. Bank, said in a statement, "Our board undertook a thorough review and determined that the per-share consideration in the proposal made to us by Men's Warehouse was simply not in the best interest of our shareholders. At the same time, we continue to review acquisition opportunities that would represent a strong strategic fit with our company and provide an opportunity to leverage our core competencies to drive meaningful growth, synergies, and substantial value creation over the long term." So just a bunch of buzzwords and jargon for saying, no, Joseph A. Bank, we will not accept your bid. Or a Men's Warehouse.
Right. What can you do? Kyle, pull up the chart of Joseph A. Bank real quick if you don't have that open already. Look at that action on Friday. Talk about technical playground.
Waiting.
Chart. Come on, chart.
Come on, chart.
Don't be a bad chart this morning.
She's trading too much for me to handle right now.
Well, I can just tell you about it. If you
There we go. I got
Oh,
her up.
hey, nice. Okay, so just look at that resistance at 57 bucks and then breaks out and
Right back down.
off to the races we go for what, about an hour, and then couldn't support that. It looks like
57.30.
Yep, right about 57.30. That also did coincide with a 20-day moving average that I'm looking at, and when that started to break down, it just dipped back below and just closed at 57.03.
And then ripped down to what? I got 56.15 on the chart right now. She's trading the pre-market.
Yes. So, I mean, this is a pretty normal to see a move like this move on Friday because of the deal or the proposed deal that's coming. But I'm expecting to see technicians just sort of all over this one once again today. And I mean, if you're a trader looking at Joseph A. Bank and you sort of want to get a little bit more exposure, why not also trade in Men's Warehouse? So, I feel like that technicals are just going to be sort of dominating the trades in both Men's Warehouse and Joseph A. Banks today, despite this updated news that we have.
Interesting.
Joseph A. Bank did actually break below 52. It looked like it wanted to hold on Friday.
Men's Warehouse, you mean?
Yes, Men's Warehouse I did.
Yeah, try to hold at 52, and then this morning just ripped right down with the news.
So what do we got now?
51.20.
Looking for some support.
Did I just hear the bell? Ding, ding.
There's, you know what? There's that dang. Wait, did it ring? I don't know. I was gonna say there's a stupid commercial on CNBC where they make you think that the bell is ringing prior to when it actually rings. I wasn't sure if that was the fake out that I always get.
It's
Yeah,
just
okay.
rude is what it
It's just
is.
rude. We've been open for about 30 seconds. Looking at the S&P futures, 1822.50 right now. Let me look at the cash really quick. I'm more of a futures guy, but let's not forget.
She's going lower.
Let's not forget about the cash. 1825.71. I see. Oh wait, was that the close? That was close. Excuse me.
I got the SPY trading at 182.45 right now.
So the market not loving this data that we had out a little bit earlier. We did get Chicago Fed National Activity Index for November a little bit earlier. It was better than expected. We did get
Personal income.
Personal income was worse than expected, and then personal spending was about in line. So we did have that bullish point on Chicago Fed National Activity Index. It's not exactly one of the more notable data points, but it's not exactly one that you sort of kick to the curb. But the street not liking it this morning. 1823.50 on the futures. Looks like I see, I don't know, a number of tests at the 1823.50 level. And the bulls just didn't want to take it over that level, and now we're selling off a bit. 1822.25 at last check. Take a look at, let's do crude and gold in that order, Kyle. Crude, look at that chart. 99.30 per barrel. I see a spike up to right at 9 a.m. Now we're down to 98.92, down almost, 20, 30 cents in just the last half hour of trade. That looks funny. Nothing exactly to account for that move news-wise. But I mean,
Crude ripped down.
In the pre-market session, I think that break into the $99 level. If you look at the chart right about 8 a.m., we sort of broke into 99 bucks, and then
between 6 and 9:20, we ripped from 98.90 all the way up to about 99.20, and now we're trading at 98.87 right now.
So it doesn't look like the floor traders out there want to have crude oil above 99, taking it back below that level. And holy cow, gold back below 1200. So we did move below 1200 at around 5 a.m. this morning. We hit a low just under 1192 per ounce in gold. When we hit that 1192 per ounce level, we started a bit of a slow recovery, moved over 1194 and then into 1196. We got some volume, we got some action, and we did cross that 1200 level, but we're not able to hold it here this morning at the open. 1198.80 per ounce last trade in crude. 1200 is obviously, I mean, it's a major psychological level, but 1200 is also going to be a huge level to watch in gold this morning. Similarly, just as the $99 level in crude is going to be a level that we're also going to be watching right here.
Yeah, we were just talking with Adam Button on the interview about gold's 13-year bull run broken this year with 29% annual loss. It's a substantial loss off a 13-year bull run.
I mean, when the market, yeah, I guess when we got the market all-time highs, I guess that's like sort of the knee-jerk reaction, right?
Mm-hmm. Pulling back.
Yeah, so I mean, it's kind of crazy to me to have gold be trading under $1,200, especially with the Bitcoin stuff. I feel like the sort of inverse action in Bitcoin and gold this year is, I mean, it sort of hints that it's Bitcoin wants to be, or some kind of virtual currency sort of wants to be used as a new hedge for a lot of money. I think sort of the gold theme towards defense might be changing here, and I don't know if the virtual currencies have anything to do with that, but sort of a new trend that is emerging here. I sort of have this feeling about.
Bitcoin's being the new benchmark.
I mean, when gold was sort of moving lower and this virtual currency thing's going crazy, that was just sort of like, I don't know, something that seemed sort of obvious to me. But
what did Apple do here at the move too?
Apple's got a big move this morning.
Ripping down to 564, 564.92, 564.02. So staying right in that 564 range.
I'm seeing a pre-market high at 573.03. I bet you if Joel was here, he would tell you that 573 to 573.05. I bet he would kind of pinpoint like a 5-cent range, where he's going to say there's a few other resistance levels there also.
Dennis was talking about how, obviously we're up $20 here from Friday after the China mobile news.
Mm-hmm.
And that we're going to see a little bit of a pullback, he thinks, but not going to give up the whole $20 gain. I don't see reason to. I mean, they have 700 million subscribers, and I don't see any negative news in that at all.
I just was reading something. Let me see if I can find it really quick. I was seeing a little bit. I think it was an analyst note speculating as to the numbers on there. I don't know where it went. I think I lost it. I think I lost my little note.
Yeah, I'm reading it right now. I don't see anything about.
I guess analysts kind of quiet this morning on Apple. Oh, this is what it was. Gotcha. It was just a report a few minutes ago. Actually, CNBC just talking about it, saying that Apple phones are expected to be in China mobile stores by January 17th.
760 million customers.
That's it?
But the big question is if Apple's products can penetrate the market. I don't see why not.
I mean, they already have some traction over there.
Yeah.
They have a couple of retail
I feel like
stores
it's a
over
ton
there.
of pent-up demand over there for Apple.
I wonder how. I mean, how do you think pent-up demand works when? I mean, the expectations have been over there for a while. Do you think that increases the sort of the buzz on it, or you think that sort of makes people want to kind of shy away?
I think it increases.
Gotcha.
I think they're going to get a ton of buying. You're going to sell a lot of phones.
So January 17th, according to CNBC right now.
Brent, do you know Apple's retail sales this holiday season so far?
Not off the top of my head.
I was talking to someone that actually works at the store, and they were telling me they're down 20%.
I wonder how.
I don't know if that's.
I don't
true or
know.
not.
I'm trying to remember if Apple gives like a seasonal total. I don't ever remember them having like a news headline where it's like we reported how many ever million iPhones sold over the holiday season. I think that would probably be on like a carrier basis. I think when we like trying to what were we trying to do that one day? You were sitting over at my desk. We were trying to find. Do you remember what I'm talking about?
No.
We were calling around to a bunch of Sprint stores.
Oh, yeah. That was what we were trying to figure out.
Was that BlackBerry actually?
Yes, that
Or
was
is
BlackBerry. That wasn't Apple.
I don't know. I think that a lot of sources try to get to the carrier first before they like plan on hearing a number for Apple or for BlackBerry in that case. But I think they're probably trying to call around to like a Sprint, like a T-Mobile, like a AT&T
See how
carrier.
sales were.
We could do a little channel checking,
Yeah, I think we should call some stores. I think foot traffic's down is what it is, but that doesn't mean that necessarily that the actual sales are down if more people are buying online.
which would make sense to me.
Yeah, I mean Apple's still trading down 560, right in that 562 level now. 562.88, 563. Yeah. So she's
Let's
still trading
take a
down this morning.
look at oh yeah, that 565 level's kind of breakdown. I was gonna say let's take a look at Twitter really quick. We kind of like to go over some of the big movers, some of the Momo names. Twitter definitely being one of those. Facebook also being another one.
That's what Facebook did at the open. I know they were
Okay.
hitting some all-time highs on a lot of these stocks in the pre-market. Woo! Facebook ripped up 561.10. She broke right through that 56 level. Sorry, 56, 56.10, 56.11 right now. Facebook is ripping up.
55. So we did move lower right at the open though. Do you see that?
I think we moved lower right to what? 55.50, 55.45.
Actually, I'm seeing a tick lower. Yeah, no, it hasn't really moved that lower. It actually
And
moved higher at the open. A few minutes after the open was when you got your first tick lower, but 56 cleared, and it looks like it wants to hold over 56. A lot of action right here at 56.10.
Facebook is ripping up. She's still going. 56.14.
I feel like
What did Twitter do?
if 56 is gonna hold in Facebook for I don't know, let's say like an hour or so, the next hour, if we're gonna hold over 56, that's gonna be a great sign. If we break below 56, we probably won't get a bit of support until 55.50 level. So you're probably gonna see a bit of air below 56. You are looking at Twitter now.
Look at that Twitter chart. I mean, you're looking at Friday. She's just climbing all day, and then boom, opened up 61.20 right now.
Yeah, Twitter don't
That is
care.
phenomenal.
Twitter don't care. Twitter don't care what you think about general market perception. It's just going. So remember, we were below 56 bucks on Thursday. Believe that. Up 10% since Thursday. And you can even take it back a little bit further than that. On December 18th, we did hit a low under 54. Nope, it was just above 54, 54.30, and then actually
Wow.
wow, this chart is crazy. I mean, started this month at 42 bucks, 41 bucks. Now we're up over 60 bucks. That is a 50% return, folks, in just 1, 2, 3, 4, I don't know, about 10 to 12 trading sessions. We're up 50% in Twitter. Huge momentum move in shares of Twitter. Up over the $60 level today. That's going to be a good sign. Up 2%. We want to hold the 60 though. If we don't hold 60, we are probably going to immediately retrace back down to 55 and then even further probably back down to 50 if 60 doesn't want to hold here.
Yeah, I'm looking at what, December 17th.
Yeah.
And so the last time we hit 60, we pulled back down to around the 55 level, played around there, and then over the last week ripped back up, and we just crossed 60. So this holds the 60 level. That's good news for Twitter.
Yeah, and what was that high on the 16th? Was it right at 60?
It's right at 60.
Yeah, so that's
right at 60. It kissed 60. It pulled back over the next couple of weeks, and then over the next week, and then over this last week we went from right on that 55 level and just started touching it on Friday at that 60 level, and this morning at the open. Now we're ripping up. I see 61.33 in the print now. 61.35.
And actually, over the course of last week, it sort of, after unsuccessfully breaking over that $60 level, it sort of rounded to $54. So what I mean by rounded is the chart sort of leveled out as it got to 54 bucks, and then didn't quite hit 54 bucks, hit 54.30, and sort of started moving higher. So actually, if we move below 60 and move below 58, I'm probably looking under the $56 level, probably above 54 bucks though for a bit of support. We got a couple minutes left, folks. Let's just take a look at. Actually, we probably got a couple more in us. I want to take a look at BlackBerry this morning. Stock last trading at, I see 715 BBRY. They did get a downgrade to sell at Hudson Square Research. Hudson Square, they are not that notable of a firm, but when it comes to BlackBerry these days, there aren't a ton of analysts on it. So really, if you get any kind of action on the sell side of things, the stock is going to respond. BlackBerry shares are down about 1% at last check. I see a pre-market high at 744, and shares of BlackBerry could not move over that 750 level, and we're sort of pulling back after unsuccessfully moving over that 716 last trade. Let's see, I'm looking at the chart from Friday. The chart spiked. Price spiked over $6 and ran into a bit of a technical level right at $7. So look out for that $7 level as the stock is moving lower from that pre-market high.
We got Boca Joka. K looking good on the chart this morning. Let's pull it up.
What Kellogg?
Yep.
Oh, okay. Good old Kellogg. Kellogg's Battle Creek, right?
Yeah.
Oh yeah, bit of a local
Michigan
company. So we do have Kellogg hitting a actually no, this stock just hit a low at $60 right after the open this morning. 60 on the nose. Looks like it's gonna want to hold $60.
Yeah, I got 60.10 right now.
So we're trading in a bit of a range here. I see the stock did move over 60.20, but then could not break into 60.30. Hit a morning high at 60.29, and we're sort of selling off. I mean, with some of the more stable kind of blue chip names like Kellogg, like GE, the non-cyclical names, you do see these range bound a lot more. So trading in the 60-30 to 60 range, this could happen. We could see this play out over the next couple hours here.
Dennis just came in here and said that 60 is huge and that relative weakness is scary.
What's the I wonder what the RSI is. Relative Strength Index. I didn't know Dennis was a fan of the old relative strength. I like the.
I got Boca's on the long side of this, saying if it holds the 60, we're going to be seeing it going up.
The thing that I like about technicals is that if it tells you what to do really. I mean, if we hold above $60, you know you can probably get a little bit more in your pocket. If we break below 60, if you get to 59.50, 59.90 even, you're gonna want to be selling.
All right, folks. Well, it's 9:46 here, so we're going to be wrapping up. Dennis, I cannot believe about Twitter and Facebook here right at the open ripping up. I would have loved to get your thoughts. Tomorrow morning we will talk about those stocks and more. For pre-market show, Benzinga, it is Brent and Kyle signing off. Everybody enjoy
Later, guys.
Your last full trading day before the holiday.
Good
As
call.
we have a half day next week or tomorrow.
Sweet.
All right, guys, have a great day. We will talk to you tomorrow morning.